Awesome, yeah. So we're doing something a little bit different for our astronomy seminar today. So this is Dr. Sarkar. I know he's looking at me. You are a doctor. So he is currently a vice president at Bank of America. He just recently went into that job. Before that, he was at Goldman Sachs for about a year-ish, a little longer, year and a half. And before that, he was at JP Morgan for 5 years. So he originally started out in astronomy. He was a theoretical cosmologist. He earned his PhD from UC Irvine, and then did 2 years as a postdoc at the University of Michigan before switching it up, and now he's in finance. So he actually went and got another degree. It's a Master of Science in Computational Finance at Carnegie Mellon, and then went on to do all of this finance stuff that we'll hear more about today.
Thank you, Janelle. Thank you, everyone, for being here, and thanks for the invitation. It's actually great to be here. Janelle mentioned that I was at UC Irvine when we were grad students together, and Louis was a postdoc, so he always took the upper hand. But anyway, it's like really glad to be here in front of all of you, and thank you for spending the time. And so before we get into any of that, I think she mentioned that he went to this school, that school. So I would say I'm probably the only Indian whose parents almost disowned him for taking too many degrees. It's partly a joke, but it's just at one point they thought, okay, would our son ever stop studying and would actually earn any money ever? So I mean, I hope I will. So, but anyway, that's the point. So just before we get started, once again, thank you again. It's a pleasure to be here. It's an honor to be here, actually. And before I get started, I wanted to mention that anything I say today are my views only, solely mine, and it's not that of Bank of America or any of my colleagues who work at Bank of America. So the idea today, I think, again, when Janelle reached out to me, the idea was that you guys are always listening to talks in astronomy, physics, and all of that. And I think being here as a grad student and as a postdoc or even faculty, I mean, you are quite familiar with different career opportunities that are there within the realm of physics, right? You graduate, you go for postdocs, and eventually you probably become a faculty member somewhere or some research scientist at some lab. But there are, of course, other opportunities out there as well, and this is not to actually persuade you to do that, but then in case, not everyone thinks the same way, in case you are not really going to pursue a career in physics and wanted to do something outside of physics, what all are out there? So that's kind of the question we are trying to answer. At the end of the session, when you get out of this room, the whole idea is that you spend here about an hour. Hopefully some of those questions that you have in your mind got answered. So that's the whole aim here. So please make sure that you ask a lot of questions. We would like to make it more as a Q&A. Some of the slides are here. They would be just as a guideline. Guaranteed that there won't be any equations here, so you probably don't even need to write anything down. If you have any questions, or if there was like a book or a paper that I mentioned and you want to know about them later on, we can email you, so you don't really have to take any notes. Just kind of think any questions you have in your mind and please shoot, right? So before we get started, can I just see roughly how many grad students are here? Okay, so that's probably most of you. And postdocs? Okay, great. And then probably 2 faculty members. Great. So again, I think the important part is, and I don't know which part of your grad student career you are. I mean, maybe you are a first year student, maybe you are a final year student. It doesn't matter. I think hopefully we'll all at the end of the day learn that what are the roles out there that you can actually eventually apply to or take part in. I was a grad student like you, of course, not that many years ago, but so I can totally understand sometimes it could be intimidating to leave the field of physics that you know people in physics, and then sometimes the outside world seems intimidating. But it is not really. And again, so the whole point is for you to understand what's going on. The title, I thought about what to name the title, and I think it's actually quite interesting to think that when I joined Carnegie Mellon as a student to do a master's, and that was to bridge the gap between physics and finance, Stephen Shreve, he's a very well-known stochastic calculus guru. He has written 2 books which are considered to be Bibles in stochastic calculus. He actually told me that you are probably going to have the toughest time understanding stochastic calculus. And I was like, why are you saying that? I thought, I did physics PhD, etc., so I should be smart enough, right? And then his idea was that in physics, everything is mostly deterministic, most for the most part, right? You know equations that govern the world, so you know, and that's a good thing. If you knew certain way when you throw a rocket out in the sky, it goes, and if it goes in random directions every time, you will have people dying all the time, right? You will not be able to carry on those things. Finance is different. It's quite stochastic, right? So today, sitting here today, you actually do not know where a stock price might go tomorrow, right? It could go up or down. And that's why it's stochastic. You can't really write down differential equations to describe financial market movements. You actually need difference equations, right? Why? Because you have these kinks, right? You can't really take a derivative. Again, I don't have some equations, but since you guys are geeks, I just thought I would throw it out there. So that's why I just said, it's kind of like going from a deterministic world to a stochastic world, right? And then you can take it in different types of meanings. It's the mathematics of it, but then you can also say like, the life there might be a little bit more stochastic as well than being in academia, and then we'll probably talk about that as well. So that's the whole idea. The whole idea is that I personally think that being a grad student in physics, being a PhD in physics or postdoc in physics, you are in a really sweet spot to do well in the field of finance as well, right? And I'll try to demonstrate that, and you will see it yourself for those of you who actually know. Anyway, so once again, I think Janelle already mentioned where all I have spent time. Typically, a speaker comes in here and they tells you probably what they have done in life or where they fit in, right? I'm not going to start with that. And the reason for that is I'm first going to tell you a little bit about how the kind of that world works, how that world looks like, and then I can tell you like this is exactly where I had fit in my prior role and so on and so forth. So that way you have a little bit more perspective than knowing where all I have worked and what I have done, which is kind of out in like, that information may not be as important or as interesting unless I tell you where it falls into the broad spectrum of things. So this is just a very broad overview of the key participants in the whole financial system, right? So how does the system work? I mean, typically what you have are, you have some investors, which can be you, which can be anyone sitting in this room, and then those investors, they have some money that they want to invest. So even faculty members here, they are given 401k. Postdocs, sorry, you don't get it because you are kind of temporary workers, so university wouldn't give you a 401k. But then typically universities give you that, right? And you probably heard your mom, dad, they have 401ks. So that you can consider those as somewhere somebody has to manage that money. Because why? Because you are putting money every year, your hard-earned money, and eventually when you retire, you hope that you will get paid, right? So the idea is that today you are spending some money, you have some money, you save them, and then they will help you at retirement or after retirement for your golden years. Now, why do you actually keep the money investing and not put them under your mattress? Anybody can answer that? Anyone?
So your money can grow.
But why do you need that interest? But what's wrong if you just keep the money under your mattress?
Inflation.
Exactly. So the main word is inflation, because today whatever money $100 can buy, it won't be able to buy 40 years from now because of inflation. So you are actually completely determined to be worse off if you kept your money under the mattress. That's why you keep the money invested. And then you keep the money invested in stocks, in bonds. Most of you probably have heard of stocks more than bonds, but then these are different types of investments that people put their money in, right? Because interest rate in banks are pretty low, right? Right now, if you open an online banking account, maybe you might be able to get 1.5%, but then typically a typical bank would pay you almost nothing. So that's why basically you ultimately invest in stock markets and bond markets. So you have the investors who have the money, and then this buy side, what I mean by buy side is basically they are institutional fund managers who take your money and then they try to invest them for your future. So this is, you, your mom, dad, everyone, you have the money, you give them to some buy-side fund. They can be mutual funds, you might have heard about. They can be pension funds. They can be insurance funds. So these are different funds. They are called the buy-side. Why are they called buy-side? Because they take your money, and then they figure out with that money, what do they want to buy, right? They can buy stocks, bonds, or whatever, but they decide what to buy. Now, on the other side, there are corporates who actually need money for their work. They have to pay their employees, they have to buy new instruments, they have to start another business, they need to grow their business, so for that they need money. And then what happens is, so these guys need the money, And these guys have the money, but how many of you individually know whether Apple CEO would need money? Probably not, right? So you need someone in the middle who would then connect these guys who need the money and the guys who have the money so that there is the transaction happening, right? So these are called the banks or the sell side. And why are they called sell side? Because what they do is that they try to create different types of financial instruments or financial products that you can then sell to these guys and then get that money, and then these corporates can use that money for their expansion of their business, buying new instruments, paying their workers and all. Okay? So that's kind of how the typical structure looks like. So capital flows from this side to this side, and then these guys get those capitals by issuing either shares or stocks that you are familiar with, and then bonds, which is basically a debt market. What are bonds? Bonds are typically, the investors tell you that, okay, you know what, this is $100. So these guys get that $100 and they say, in return of this $100, I'm going to give you $5 every year for the next 10 years. And then at the end of the 10-year period, I'll give you your $100 back as well. So essentially you are earning something like, putting money at a bank. So you are earning a fixed interest, or it's also called a coupon. That's why it's called fixed income. So you are getting a fixed income every year, and then your money is also there. And at the end of the period, you are getting your money back as well. Now, sometimes you might think that your money is really safe when a government is borrowing. If United States government is borrowing $100 from you, you hope it will be safe, right? At 10 years later, you will get your money back. Because the United States government has pretty much 5-star rating when it comes to their credit. Now, let's say the same amount of $100, I ask from you, I say, I need to borrow $100, I'll pay you back in 10 years and I'll pay you interest every month. And then US government also asks you. Now, who do you think you will ask for more interest, US government or me? Okay, you pointed at me. Why? You don't even know me, right? Yes, Jonelle introduced me to you, but then that's about it, right? You don't know my credit score, you don't know my spending habits and all of that. So you would actually require way more interest if you gave me money. For United States government, you would not require as much money. Now let me ask you another question. United States government asked you for money and Brazil government asked you for money. There's nothing against Brazil. I'm just saying, just another country. Italy, any country, right? Would you require more interest from them or United States? Them? Why? I'm not going to answer this. You have to answer because I'm on record. No, because typically what you think is that United States government is probably the most highest credit worthiness, right? So that's kind of considered to be the base. And then every other country you say, oh, I'm going to need a little bit more. So the whole idea is that based on someone's credit, you typically need a little bit more to compensate for the risk you are taking. So in finance or in life, when you take risks, so rewards don't come without risks, right? For some people it might. You might be born with a golden spoon, most of us are not. So you have to take risks in life to get some rewards, and which is true in this case as well. If you want more reward, meaning more interest rate, you are going to be, requiring to pay to someone who credit worthiness is probably less than the United States government. It's very simple like that, right? Any questions so far? And please stop me, I'm trying to go slow, but if I'm also too slow, you can say, dude, pace up, because we know all these things, right? If you know all these things, just let me know as well. Okay, so now this sell side and buy side, if you think about in the finance world, if you are actually going to go and then get a job, if you're going to work, what are the jobs that typically attract graduate students in physics? And I'll come to that more, but this is just to kind of summarize the idea that we were talking about. As I mentioned, that on the buy side, you have people who are raising money from those investors. Remember, these investors were you guys. And then you are raising money from those investors, and then you are investing in different type of assets. As I mentioned, they can be mutual funds, pension funds, endowments and foundations. I'm sure that you are at Texas A&M University, you guys have endowments. The endowment money doesn't just sit there, right? They have to grow that money over time, and then from that growth, you can take part of that money every year, which pays for many of the things, I'm sure, for you guys, right? You have a great institute, so there are endowments that pay for it. So those endowments have to grow over time as well. And then also hedge funds. Hedge funds, how many of you have heard of the word hedge fund? Okay, so they are supposed to be, a group of institutional investors who typically invest money from high net worth individuals You have to invest like a lot of money with them, and then their idea is that they can invest pretty much in everything. They can leverage a lot, so they are a little bit high risk, high reward type of investment. Mutual funds are typically where maybe some of your 401ks are going in, etc. Right? Now on the other side, the sales side, I already mentioned that the investment banks are there, the commercial banks are there. There are also broker dealers, meaning broker dealers who are actually doing that transaction. We are finding the buyer and the seller, and then they are matching them together. So that's what the broker dealers do. Market makers, market making also means the same thing. So let's say here someone wants to buy 5 shares of Apple, and Janelle wants to sell 5 shares of Apple. The broker, the market maker, what they would do is that they will create a market and they'll say, okay, I'm going to take those 5 shares from Janelle, and then I'm going to sell that to, let's say, Louis, right? So that's basically what a market, and if I am doing that, I am a market maker. So I made that market where Janelle and Louis, they could be connected, even though here they didn't need to, they live together, but I'm just saying in case they didn't, this is how they would be connected, right? So that's kind of how the sell side and buy side works, right? And then as a physics grad, you can actually be part of this or this or this or this or this in all of these pools. Typically not much commercial banks, but a lot in investment banks, and then maybe even market making, and then of course any of these. Some of the hedge funds are highly quantitative in nature, so there is a tendency of, for grads or with mathematics, physics, computer science PhDs to go there, and could be other reasons as well, but that's one of the reasons. Okay, so now in this sales now let's get a little bit deeper. I told you about like the overall what they can be, and then these are some of the typical jobs that or career opportunities that you might have. On the buy side, again, as I mentioned, there could be an asset management firm, that could be a mutual fund or hedge funds. Prop shops are actually, again, investment type firms. What they do is instead of managing investors' money, they manage their own money. So let's say, there are some, that's what they call proprietary shop or prop shop, right? They are proprietary firms, meaning they use their own money. So they are not taking investors' money into their pool. Maybe there are 2 guys who are like really already quite rich. They basically hired a bunch of people, and then the business overall grew. But then it's basically those partners' money. That's what they are investing as opposed to investors' money. High frequency trading can be part of hedge funds as well, but high frequency trading is trading where you are essentially trading very fast. And who can raise hand and tell me what I mean by very fast? How fast do you think this trading can happen? How much?
No, second trading is good.
Anything else? Okay, actually, what's your name?
Dan.
Dan. Okay, so less than a second is also true, but actually it's less than millisecond, right? So you are actually trading that fast. So each trade is happening that fast, right? So you can imagine that kind of trading firms would actually need a lot of people with computer science type background, with a lot of quantitative background, because you have to code to make things available super fast, right? You are doing things at a millisecond level, so you can imagine that you have to be like really optimized coding experts, right? There is also like buy-side research. You can be in the research arm within the buy-side funds as well. And then of course, do you know what venture capital is? How many of you have heard about like WeWork? Okay, no one. Okay, so now on the sales side, what are the career opportunities that you have? You have investment banking, as I already mentioned, the JP Morgans of the world, Goldman Sachs of the world, Bank of America, Morgan Stanley, Citibank. They're all big investment banks in the United States. Within investment banking, within the investment banks, there are different types of roles. One of them is called investment banking, right? So let's first take a step back and understand that what do banks do? Banks have 3 or 4 really major operations. One of them is called the investment banking division. So that's the division where people who mostly always wear suits with tie, and then they generally go look for like M&A activities, meaning mergers and acquisitions, IPOs, right? These are the parts that these investment bankers do. So what do they do? Like, let's say you formed a company of your own, you'll go hire an investment banker, they will come and value your company, they will take your company in the public market. IPO, right? You have all heard about IPO, initial public offering. So if I use any jargon that you don't know, please stop me. So those are the investment bankers. Then there can be trading. So meaning as a part of investment banking, the second big business is the markets business. By markets business, that's the market making business, meaning there are all these buy-side firms that I talked about. They want to buy stuff, and then they are basically matching them, right? So they are taking risk within the bank. Desk quants are quantitative analysts. They are also called quants, and they are called desks because in banks, let's say there is a trading, they are called trading desk, meaning these are some of the traders that they trade equities. There are some traders that trade fixed income. So this is an equity trading desk, this is a fixed income trading desk, okay? And those desks, you are a quantitative analyst for that desk. And that is probably the most, the field where most of physics, math, PhDs you will find, right? Because what you are doing there is you are actually using a lot of stochastic calculus, a lot of statistics, and you are creating models that these traders will eventually use to price financial instruments, right? And then that definitely require a lot of math and a lot of coding. And that's where most such roles would lie. Sales is of course you are keeping client relationships, etc. There are a little bit less people in sales, maybe from physics and maths PhD, but that could change over time. Can you guess why there are a little less people in sales?
Good people skills.
Very good point. And that is something I really want to highlight today, is that, and we don't want to be, marked as those, right? We don't want to be marked as those people who are like really good in math, really good, but then, they say, oh, they want to live in their own bubble. How many physics PhDs have you seen who want to live in their own bubble? Many, right? So, but then sales is exactly opposite of that. You have to like really mingle with everyone, like take them out for drinks, food, but you have to maintain relationship, right? Solid, meaningful relationship takes time. It's not just saying hi to someone. Solid relationship takes years to build. And sometimes these banks, they rely on them heavily because as a buy side, you have so many banks to go trade with. Why would you trade with just one particular bank? There's a franchise value. Why would you trade with Bank of America? You have a franchise value, and then you also have good salespeople in there with whom you have relationships for years, right? And then of course there are other things like we probably provide really good research environment. So if you are actually Bank of America's client, maybe you getting amazing research at your disposal. So all this could happen. But then that's one of the reasons why good sales team is very important, and you need people skills for it. But I would argue that you also need technical skills. Because if you only have people skills, if you do not understand the market, if you do not understand what the quants are doing, what the researchers are saying, you might look not as smart in front of some of those hedge funds or mutual funds, right? Then they might say, oh yeah, he's really nice to talk to, but then am I getting really in-depth information from this guy? So you have to be both. So it's kind of like a challenging role to be honest with you. Structuring is a role where you structure different types of financial instruments for the end clients. And by structuring, I mean, so let's say, there are, as I mentioned, that there are corporates, etc., where they need money, and then you have the investors who want to pay them money. But it's not always direct. You do that through some sort of financial instrument, financial product, and these structures typically create those at many times. Then you have this research, which is also a very important integral part, and then the research kind of sit in between this trading and sales, and what they do is they try to follow the markets, they try to come up with different trading ideas, etc., and then they are essentially kind of generating that intellectual property for the traders, for the sales to then go out and talk to clients. So sometimes if you have a very, very strong research arm, you might say that, hey, clients, you come trade with us because we have a very strong research, and you will be exposed to all that research. And the roles here, as you can imagine, is also another role where mostly you will see physics, math, PhDs, etc. Because what do you do here? Research, right? So you're just basically doing the same thing, but in a different field, right? FIC means fixed income, currency, and commodities, and then this is equity. So typically in the bank, the way you structure it is that the equities or stock market departments are somewhat separated slightly from the fixed income, which is bond market, and also currencies, which is like FX market, and then commodities, which is gold, silver, and all of that. Right? And finally, any bank, any traders, they take risk, right? So just let me give you a quick example. I talked about where Jonel wanted to sell 5 shares and then Louis wanted to buy them. But then let's say Jonel wanted to sell 5 shares, but Louis only wanted 3 shares. So if I am the market maker, or I'm the bank, then I'm taking 5 from her, but I'm giving only Louis 3. So I still have 2, right? So that is risk on my book, because if I'm holding those and Apple stocks go down, then I'm going to lose money, right? So that's risk. And then there are various types of risks within a bank. There can be this market risk. This is exactly what I just described. The second thing could be credit risk. Maybe I'm talking about this bonds thing that I talked about, that you lend me money and then I completely go bankrupt. So that's my credit risk, right? So banks go through a lot of risks, and there are people or quants who are actually modeling this risk, who are telling the traders, hey, wait, you can't take more than this amount of risk. They might be telling, okay, you know what, you can't really lend to Dev because his credit history is bad. Which is not true, but okay. So then, so these are also some of the roles where you will see a lot of quantitative people going, right? So there's a lot in here, but then this kind of gives you some rough idea about what are the different types of roles where you can go in. Any questions so far? That means you guys are understanding everything, or I'm completely like.
I can ask a question.
Yeah.
So to be like a desk quant,
Yeah.
like do people just like jump straight out of PhDs and into that type of position, or do you need to like do like a separate sort of?
Right. So actually that's a very, very good question, because when I was, so if you go back to 1980s and 1990s, many physics PhDs and applied math PhDs, they came out of grad school and then they directly became desk quants. So one of the books that I recommend as your bedtime reading toward the end is called My Life as a Quant. It's by Emmanuel Derman, and he was a physicist, and he became a quant, and he actually has lots of big models that he wrote. He's very famous. He's also a professor at Columbia now. But then that book I recommend all of you go read. It's basically, in those times, and then one of the main models, Black-Scholes model you might have heard of, there's a lot of resemblance with physics. So if you go back to those days, many people came directly out of physics, math, applied math, maybe even statistics PhDs, and became desk quants on day one. Those are also possible today. Sometimes, because the world has become a little bit tougher, there are like a little bit more people now applying to these kind of roles, etc. You just have to demonstrate that you have something a little bit more than just a PhD in physics. And over the next few slides, I will get to that. I'll get to where you need to be and what you need to do to actually make yourself stand out amongst hundreds of PhDs who would actually apply for these roles. So the direct answer to that question is, in 1980s and 1990s, you could just come up with a physics PhD, go to a trading desk, and you would be probably hired. Today, you just need to demonstrate a little bit more. Because why? Because many of us are actually going to go into this. Any other questions?
So, which of these have you worked with?
Okay, yeah, thank you very much for asking this, because this is where I was planning to mention that, and I was almost forgetting. Thank you very much. These are my questions are very, very helpful. So, I started my career at JP Morgan, as Janelle mentioned, where I was in fake research. So basically, this is what I did for 5 years, nearly, mostly in the fixed income part of fake. So I did a lot of research on interest rates around the world, especially United States, and then also interest rate volatility. So it's essentially using with bonds, right? So fixed income markets is bond market that I was talking about initially, a lot with fixed income derivatives, so rates and rates derivatives. So that's the research I did there. Our job entailed not only just really following the market, making our own models to see what kind of investments would work, starting from a week from now to maybe 6 months from now to maybe a year from now. So that's kind of the role that I was there, and we would publish those research articles. It's not as strict as publishing, for you guys in a journal publication, but then we would send those research reports out to like all our clients, to go to tens of thousands of clients every Friday. And then they may like your trade, they may not like your trade, but what that does is that gives the sales force something to take and then go and then talk to their clients. Like, hey, this is what our research guys are saying, and then what do you think? You might have seen on TV, etc. There are some equity research people who would come out and say, okay, go buy Apple, go buy this, go sell this, right? So I was the equivalent of that, but in fixed income. So we can say, oh, interest rates are going to go higher, buy this or sell that, something like that. Then at Goldman Sachs, I was in structuring. Just wanted to see go from one block to another. This was the nearest block, so I just jumped there. So here what you do is you actually talk much more closely with clients. You try to understand what is it that they are trying to achieve. Maybe a client's viewpoint is, they already have, whatever, whatever billion or $1 million, and they want to invest a part of this into some particular type of fund. And then so we would actually create those funds, and then the part that I was involved in is called a systematic trading strategy. It's also sometimes called quantitative investment strategy, which is some strategy that you only do based on just a mathematical model. You are not changing that. Once you have set the rules, they are set in stone or paper or computer, whatever you want to call it, and then you just trade based on that forever, for years and years. The idea is that in some market environment they may work, in some markets environment they may not work, but then over a long period of time, 10 to 20 to 30 years, they work. So those are all actually built on mathematics. So there was no human input too much into that. So that was what I was part of there. And then right now, I'm actually part of a completely new team at Bank of America, and then the team is called Data and Innovation Group. And the whole idea is that how we can actually use either smart data or smart analytics in different parts of the business. And then given my background in that fake part, I actually focus on the fake still today. Any other question? Okay, so moving on. Again, a little bit about it. Sometimes you might think like, what does the structure look like, right? Here you know it's undergrad, grad students, postdocs, assistant professor, associate professor, and then I don't know, you become chair and all of that. So here in banks, so on the sales side, which is again, remember the banks, the structure is a little bit more hierarchical. It's a little bit flatter structure when you come to the buy side. So on the sales side, you start as an analyst, then you become an associate, then you become a vice president, and then sometimes some banks have directors, some banks directly after a vice president you have managing director. And sometimes in some banks you have the director in the middle. So if you do not have the director in the middle, then you'll probably be vice president for a little longer, but then if it is there, then you'll become director and then, right? So that's a very typical, very typical standard structure in a bank. If you actually have a PhD and some postdoc also, maybe so some work experience, etc., you will probably be skipping the analyst part. But then undergraduates, definitely analysts, and sometimes just with a PhD, sometimes you might start as an analyst or sometimes associate. It just depends on the particular bank and the kind of desk you are going to, etc. On the buy side, it's a little bit more, you can be either a developer or you can be a researcher. And then essentially you can be a portfolio manager. Portfolio manager is the one who ultimately decides what investments they want to do. But then these guys definitely help them come to that decision, right? And you remember I told you that on the sell side you can be a researcher, right here, which I was as well. And then these guys sometimes get tons of such research, right? Sometimes their job could be to do their own research or to look at these like 20 sell-side research and then say what is really relevant for this portfolio manager to understand, right? So that's part of their job as well. So, and typically if you are coming out as a PhD in physics, you will most likely come here as a researcher, or unless you have like really good at coding and that's what you really love to do, you might start here as well. It would probably be very unusual for you to just come out of it and start becoming a portfolio manager and start managing a couple of $1 billion, right? It should not be that way. Then Chanel and Louis and their 401k should not be investing in those biases. It's scary. But anyway, so for a PM position, you typically have to prove a little bit of track record, right? Which is a good thing. Otherwise, you should be scared with your own. Okay, so now why I think that you guys are in a sweet spot. So that's kind of what I was trying to get to, but then there is a lot going on here, and I mentioned this as a required skill set. Many of you have many of the skill set, and then maybe you do not have some of them to the greatest extent. And then I wanted to highlight some of those. So what do you exactly have? I think one thing that is extremely important for any field, be it in physics and be it anywhere, is to have inclusiveness. Right? You have to have that. Because without that, you are not going to succeed, no matter which field you are in. And of course, by being in physics, you have already mastered this number 2, right? You are a problem solver. You have been solving problems like from the time you were doing it, problem solving from like the back of the book. But then one great thing about being a PhD is that you are now solving some unsolved problems. The problems that you are attacking now, they do not have an answer at the back of the book. Or if you type on the internet, you will not find an answer. That's what you're doing now. that, and you also know, being a physics PhD, is that if I'm going in a wrong route, you know where to stop, right? Sometimes figuring out that this is not the route to go to is also a positive development, because you have ruled out one out of n number of possibilities. And then as a PhD, you know where to stop, and that's also very important. And you are not freaking out just because there is no answer, because you know that there could be routes that lead to that, so you come back out, you take another route, right? That's important. When you come to the fork, this is very important. Solid quantitative background you all have. And then I'll talk a little bit about that in the next slide, but you all have solid quantitative background, and there is no doubt about that. You have also, being in physics, and then especially in astronomy or anything, nowadays I don't think you can actually deal without handling data. How many of you today have been doing research where you have not used computers, you're only using paper and pen, right? Those days are pretty much, I mean, maybe some of you. But then even then, I'm sure you are familiar with like data. And I'm not talking about you have to deal with terabytes of data, but at least you know, when you look at a data, you know how to analyze it. When you look at like a really crazy outlier, you know how to exclude that. All of that, right? When you look at some correlation between, I actually should have brought it, I wanted to bring it and I forgot at the last moment. There is one website where you can go and look for spurious correlations, right? There are some really funny ones, right? You know that when to trust a correlation and when to not trust it, right? You know that correlation doesn't always lead to causation, etc. So these are some of the things you know by virtue of being a PhD in physics. And that's why, and those are very important. You also have done some sort of modeling, right? And then maybe you might have to do a little bit more in finance, but still you are familiar with modeling, and which I think is extremely important. Most of you have programming skills. Now I have mentioned here C, C++. If you were a desk quant that Louis had asked the question about, you would probably need to be pretty good at this. But then if you are in any other role, you can probably be good in just Python and get by. And nowadays Python is becoming more and more the used one. Now, I know physicists are snobs, okay? I know that. But you can't be a snob when it comes to Excel VBA. You have to know some of that, right? Because the thing is that in banks and in other places, there are people who are still using that. If you go there and on your day one, you say, oh dude, I have a physics PhD, I don't do Excel. I don't think that's the right attitude, right? So, and it is not really, sometimes it can add some value too, because it's instant visualization, you can just, improve it, just add one more data and then boom, you have the chart. So there are advantages to that. And to be honest with you, sometimes if you did an internship or sometimes you work at a bank for a very short period of time, many people have really impressed senior management with just this skill. Why? Because sometimes maybe there are some really old ways of doing things in Excel that exists, and then they go in there and then they disrupt the system by actually doing something really cool in VBA which automates the whole thing, and that helps everyone on the desk, right? Because they were not thinking about it. They were thinking, okay, this is like the usual way of doing it. You go there, you have some really cool VBA skills, you set it up, it's all automated. Every day they used to come in there and there was 1 hour of work every morning. It is now completely automated. They come here.
Excellent. Can I ask a question which might underline my reveal my snobbery here? I don't know what VBA stands for.
Oh, Visual Basic. So it's essentially you can actually code it up within your Excel, and then you can actually have, so let's say the Excel, so typically if you just think about it, you open an Excel, you might do another, you add some data, you can do a chart, etc., right? With VBA, what you can do is you can automate the whole thing. So you will come and you will hit F9, it will go to another web page, get that data from there, you will come back there, it will create the Excel, it will just do everything in a click of a button. So what they have done is like sometimes people are probably going, downloading data, coming in, putting it there, and then you create something where you are just web scraping very easily and then it's done. The other thing you can do sometimes is by using Python and C++, you can actually do something where you are in Python environment, you might be calling some C++ function to get some pricing from somewhere else, right? You incorporate that and then your VBA function calls that to ultimately do the plotting. So you can do something really cool things and you can do it so easily. I mean, of course it will take some time to do it, but then once you have done it, the whole desk can benefit from that. You have basically saved hours from their workday. And then some people have like really gotten return offer just by doing something cool. It's possible. And then also like a nice balance of independent thinking and great team player. This is very important. And then that is something where If you are a grad student or a postdoc who is really working a lot on just your own project, you may not have a lot of team player skills or collaboration, but I know that most of you do a lot of collaborations. So not only that you are able to think independently yourself, but you also have to collaborate a lot with other people. And that is very important in finance, right? And then communication, this is something I can't emphasize more. This is one thing I would say that many highly quantitative people sometimes are not the best at, right? But this is something extremely important. Let's say you build an amazing model, which is very, very, I don't know, like really, really cool, but then when you go and try to explain it to someone, to some client or senior management, you just use some really weird language that only you understand because you have been playing with this model for like a couple of years, and they are like, okay, I have no idea what he's talking about. Also, sometimes, you know, you should not come out as intimidating. You should be someone who is able to explain something in a very simple way. So expressing yourself and expressing your work in a very simple manner is extremely important. And it's important everywhere. Even if you just decide to be in physics and you become a professor and then nobody can understand anything that you're saying, you go to give talks, nobody can understand anything you are saying, it's not a great situation to be in, right? And I'm sure you have seen one or two people who are like that. Really smart people, but can't talk at all. I mean, when they're going up in a seminar, you're like, okay, let me take a lunch break now because I'm not going to understand anything you say. So don't be that person. And you know, it's actually very easy if you are grad students, you know, you guys can create groups, and then someone who has that fear of public speaking, you can actually just make him or her just get out there, stand there, and then give a talk within a small group of people. From 4 people, eventually it would be 8, and then eventually it would be 100, right? So I think that's something where each of you can help each other and grow in terms of the communication, right? But with all this, I really come back to this inquisitiveness and enthusiasm. If you do not have that, then, you know, then I don't think you can flourish in anything, because ultimately all the questions you're asking that because you're inquisitive about something. And the same is true for physics and finance and everything, right? Okay, so this is why I think that you're in a sweet spot, because you have all these skills which are transferable to finance. Now this slide also gives you a great way to write your SOP if you're applying to finance, because you know, just take this, copy it, and you're done. No, I'm just kidding. Of course, you will put your own flavor. So in terms of those technical skills, I just told you that I'll have one quick slide on that. Most of it are very important in finance. You know, most of it I think comes very easily to you guys. Who doesn't know what PCA is, or rather, who knows what PCA is? Okay, great. Because the negative question sometimes doesn't help. So principal component analysis. So there was one time where I was actually interviewing one person, and he was talking about that he wrote PCA 3 times on his resume. So PCA was mentioned 3 times, right, on 1-page resume. So definitely that person would be expert, right? So I asked him that think about that I am someone who doesn't know PCA but has some knowledge of statistics and all that. Explain to me what PCA was. He was not able to explain at all. I'm not joking, like not at all, right? If you're in that kind of a situation, that's not a great situation to be in. You mentioned it 3 times. It's also not something, it's not a word, right? So if you mention it 3 times on your resume, and if you can't explain that, that's a bad situation to be in. So that's why it's important that your resume reflects accurately what you know and what you don't, right? Nobody's expecting you to know an options pricing model. But then whatever you have done in physics, if you are good at that, that's very easy for us to gauge. Then we will know you will be good at like whatever we give you to do, right? So that's kind of how it works. I'm sure like many of you do a lot of simulations. Machine learning I put in there because you know it's basically some advanced way of doing statistics, correct? It's like really fancy name, but then you know I don't know why it appeared twice, and it's very sorry. Maybe to emphasize it a lot more. I was going to say that I put it twice to emphasize it, but no, it was my mistake. And then you know big data and machine learning, they probably go hand in hand, because as I mentioned that as we enter in a world where data is there, you know, everywhere, right? So if you are not using big data, if you are not able to handle that, it's probably hard to succeed in pretty much any field nowadays, and astronomy also for sure, I'm guessing. So I think these are all the skills that are important that you already have, and you know it probably is worthwhile to just brush them up a little bit. Now, culture. So this is where, so I talked about a lot of similarities. We should talk a little bit about the differences, right? Because not everything, it's not the same, it's not just one-to-one, right? Because then to have a good perspective, we should know all the differences as well. So first of all, culture can depend a lot from like a firm, because a buy-side firm can have 5 people in it. I'm not joking. Right? You can have a 5 people hedge fund, or even 3 people hedge fund. Can you have Bank of America, JP Morgan, 5 people? Nothing. Tons and tons of people, right? I think hundreds of thousands of people. So it is going to be definitely different from one firm to another. It is extremely fast-paced. One advantage of probably doing research in physics is that yes, you have lots of deadlines. You typically don't have deadlines every day. In finance, you can literally have deadlines every day, right? It's very fast-paced. Most of the projects would have a timeline that can last even hours. You might have a client call, a big client of yours called you, gave you a project, and they want an answer 2 hours from now. And then your senior MD is also asking for 2 hours, and now that's it, right? You have 2 hours to do it. So there could be many, many times that this can happen. So it is very fast-paced. There's a constant feedback loop. What I mean by that is, let's say you are building a model that most likely will be applied in the marketplace very soon. As soon as your model is like, it goes through all the checks and all the nuts and bolts are tied, it will be applied to the market, and you will know within hours, if not days, or days, if not hours, or maybe even within weeks, whether it works or not. Sometimes it may not. So you get a very, you get a feedback, you build, you come back and you enhance the model, then you get again feedback. So it's a very nice constant feedback loop, which I actually like a lot. So as I mentioned, that this I already talked about, the project timelines can be really much shorter, but you will also have like longer term projects, and you have to multitask a lot between those two, which I have mentioned in the end, and it's actually very, very important. You might have like one senior MD comes to you and gives you something, another client has called you, asked for something else, you have another thing due today anyway. So there are a lot of things where you are multitasking. You are going from one thing to another, from a short-term project to a long-term project in matters of hours. So that's something that you have to be quite focused on. It is client-focused. In physics or in research, you are doing your own research, and I know that you are supposed to be helping out others, etc. But it's your project, it's your baby, right? Here, it's client. When a client calls you, it's always clients first, right? So no matter what you have been doing internally, in most of the roles, when a client calls you, especially the big client, they are first. So most businesses thrive on client first. I don't know whether you have heard about, like, even I think Bezos has like one of these things where he talks about, from Amazon CEO, that it's all clients, right? So that's your number one thing. So we always make sure that, when clients reach out for something, that you are making them doing something so that it ultimately, makes them not just happy. The whole idea is to serve them, right? Serve them well. That's the whole point if you're on the sales side. Most projects are proprietary. When you hear, if you publish a paper, it remains your paper forever. But then if you're at a bank, most of the things you are working on, especially if you're a hedge fund, you can't talk about those things like ever. Right? They have like NDAs that you will be signing, and sometimes for some of those firms, once you leave the job, you can't work for a similar firm for 6 months, some places 1 year. So, very, very strict about that. You cannot, I cannot really talk about what projects I'm doing on a day-to-day basis. I cannot email it to myself either, right? So I can't even email it to my Gmail account or anything. It has to be just only firm's account, etc. So they are all proprietary. So remember, whatever you're doing is the firm's property. And then maybe, how many of you actually write your paper until 3 a.m., then go to sleep, wake up at 11 a.m., and then come to work maybe sometime in the afternoon, but then again stay all night, right? So that's not going to work here. So I was like one of you who were like that. Maybe I used to sleep really late and maybe wake up late, but then when I first started at JP Morgan, we had a meeting every day at 7:15 a.m. So every day, 7:15 a.m. there was a meeting, so you have to be there. So your life becomes a little bit more structured. That's so these are some of the cultural differences, I'd say. And then, if you have any other question, you can definitely. So any questions so far?
What's your life outside of work like compared to acting?
Okay, that's definitely a great question. So, it all depends on yourself. So I think it mostly depends on how you deal with it. You will have hours that are long hours for sure. And then I was going to say one more thing about the long hours. Because you have long hours, and then because people are, so here, I came here and then I saw, most people, for example, professors, or here, like Janelle, Louis, I went to their offices, they have their own office, right? Even grad students are only sharing one office between 2 to 3 people. Can you guess how many people are there on a floor, on a trading floor in a bank? Maybe 500 to 600. Okay. Even senior MDs, most of them don't take an office. They sit next to you. So here, everybody is just next to each other all the time for 12 hours. So here, character is a very important thing, right? And I'll come to that later as well. So sometimes you might be really talented, super smart, etc. But then you are really, really not as pleasant person to sit next to for 12 hours, then you will not be hired. Because ultimately, you have to spend that much time next to someone. You want that person to be more or less pleasant, right? So that's important. Now, coming to the hours, yes, the hours can be long, but then what you do outside of that, I think to some extent you can dictate that. If you ask that question to me, it's very easy to answer, and maybe people who are on my Facebook, they know that I actually do have, I'm doing it less this year, but I was dancing, and then, so for that I had to sometimes spend at least 12 hours a week for dancing, right? And then I took it out from this busy schedule, and sometimes I would have to go back to work. So I go to my dance class, and I also went back to work later at some time. But then, it's that how you handle it. So you can do it. So I personally think that I have a really big social life as well. So I think how you organize that, it matters a lot. So outside of that, I also do lots of charity work. I do, charity runs, biking, half marathons, this, that. I'm really bad at swimming, but I'm planning to do a triathlon. So you can do things outside of work as well if you want. Any other questions? Yeah.
Is it easier to detach from work whenever it's not, because
Yeah, I
often
know.
you're personally invested in it, so it's hard to detach it from yourself when you go home.
Right.
Not work in your home.
Right, exactly. So for however long I have known Janelle and Louis, I know that they work every waking hours. Maybe they also work during sleep, that I have. So you can to some extent detach, yes. So sometimes if I'm going, I like yoga a lot. When I'm doing yoga, I typically don't think about the code I ran yesterday or the client I met yesterday, but you can. And sometimes you do have weekends, right? As a grad student, you typically don't have quote-unquote weekends. But in here, sometimes you might have to go to work and then finish something up, but that won't be more than for a couple of hours maybe. Then you go back and have your own life. So you can detach, but sometimes you are working on some really important deliverable, which is there in the next week. Then maybe you can't detach yourself for that 1 week, but then typically you can. Sorry, you have a question? Okay. So, and then any more questions so far? I don't really have that many more slides, so you can keep asking. It won't be that you will stay here longer if you ask questions. Okay, so roadway to success. So now I already mentioned that you are already in a good spot, but then there are a few things that I think might help you in terms of really getting yourself out there. And I have 2 slides on this, so there is one here and then another one for interview, right? So I'll go through both of them. So number 1, the preparation. And number 2 would be the interview process. So that's why I separated in 2 different slides. So definitely you will sharpen your quantitative skills. And when I say that, you might think, okay, yeah, I'm a physics PhD, dude. I know all my math, right? Not always, right? You are not really doing the same integration or same linear algebra thing every day at your everyday work, right? So it makes sense to actually go over some of those. And I will mention some bedtime reading that would help you with that. But definitely it is important that you hone those skills a little bit. Sharpen your coding skills. Even if you are not going to code in any of these, if you don't know coding at all, it may not be the best time to apply for a finance job. So maybe take some time to, and it's not, if you did a physics PhD, you can do Python. I mean, I'm sure. So then spending some time to do that might help. Now I think this comes back to Louis' question, and I mentioned that I would address it again. He asked whether you can just come from physics PhD directly to finance, right? Yes, you can. But as I mentioned then, this is not 1980s anymore, so you need to do a little bit more. On your own, you can actually learn some option pricing models, Black-Scholes, etc. It's not that tough. And this is a capital asset pricing model. So you can actually learn these on your own and then show something that you have done beyond just doing physics, so that as an interviewer or as a potential employer, they know that you are genuinely interested, right? And here I'll just quickly mention one thing that I did. I was in physics. I was actually a postdoc at Michigan, as Chanel mentioned. And during that time, I was really interested in financial markets. So I actually even started a blog on finance. And it was on just options investing, etc. And then during my first interview at JP Morgan, this guy who interviewed me, he actually asked me a couple of questions from that website, from my blog. And he had actually read a couple of posts on the blog. And then my first job I actually got because this guy was impressed with the fact that, well, even though I was just a physics PhD, I actually went out of my ways to create that, because it was not just a 1 hour job, right? It was like a lot of hours spent on that. And he was like, okay, that was pretty cool, that showed that you were genuinely interested. So I'm not asking you to start a blog tomorrow, but what I'm saying is that if you really want to show them that you have done something, then show that, right? What is important is to build also a market intuition. You can't just tomorrow call up a bank and say, hey, I'm interested in you, interview me, and then you go there and then they ask you, anything about like a stock market, etc. You have no idea, right? Then they would think, okay, you are just trying to go there for something else, right? But like the greener pasture or whatever they want to call it. So you need to show some interest, like why are you going there? Why? What is it that you have that maybe all your other rest of your peers don't have, right? Something where, and you can do that by following the news, the economy, like what the Fed is doing, the Federal Reserve. So you should, if I ask you what is the Federal Reserve and you have no idea, that's not a great thing, right? And if you just followed very simple news, you can actually know that. And actually, to be honest, if you followed someone's tweet nowadays, you can know a lot about it. But the point is that, there are ways to know that, right? So follow it and build an intuition. Building an intuition is very important. A resume is extremely important. So in academia, we write CVs, which are like 10-page long, right? But in finance, they typically prefer a 1-page resume. And to be honest, if you believe me or not, as a grad student or even as a postdoc, don't tell me I have done so much that I can fit in a page. You can. If you want, if you try, you can definitely fit it in 1 page. So do that. If you actually want to create a resume, it should not be more than 1 page. Networking is so important. It's that's why I wrote it 3 times with exclamation mark. I don't know how else to make it more important. Maybe I should have put network on the second line, like machine learning. But other than that, it is really important. Without networking, unfortunately, because what is happening, as you can imagine, right? The pool of people who are trying to get to those jobs is like getting bigger and bigger. Those jobs are not actually getting bigger and sometimes even shrinking. So you might be like really smart and have a great resume, but then having that network, I would probably, if you network a lot, maybe they will know you as a person. They will know you better, and that really will help. And then inquisitive is fine. Following your passion, as you all know, what is the roadway of success at the interview, right? So definitely do your homework on the company before you interview. You went to interview for Bank of America, you didn't even know it was a bank, right? That would be like really bad. So do the interview. You will probably know. You can ask the interviewer, the person who is setting up the interview, can you give me the names of the people who are interviewing me? Then go through their LinkedIn profile, try to understand what they have done, try to understand what the company does, try to understand what the department does, etc. Then if you are asked the brain teasers, they are only asked sometimes to see how you work on the problem. You don't need to know the final, you may not even get to the final answer, but then work your way out. Think out loud. Sometimes you can engage the interviewer to help you as well, right? So that's how you should approach that. Do not only focus on your skill set. Focus on some of your characteristics as well, right? Maybe show something that you are a team player, you have attention to details. Bring up some stories of life which shows you that these characteristics are there. Because guess what? Skills can be learned. Your characteristics are yours. They are not going to go away, right? So please focus on that as well. Always be yourself and be honest. Don't try to do anything on the resume that you don't write PCA 3 times if you don't know what PCA is. Don't try to be someone else. Just try to be yourself, because it's very easy to see if you're trying to be someone else, right? And then of course at the end of the interview, please ask them meaningful questions as well. Remember that it is not just them interviewing you. You also need to know whether that's the right culture, whether that's somewhere where you can fit in, right? Ask them meaningful questions. And then when you ask them meaningful questions, they also know that you spent some time thinking about this. You just didn't show up one morning, right? So that's that, and this is the last slide. I mentioned some bedtime reading. I actually showed this slide to one of my friends, and she was like, seriously, these are bedtime readings? I mean, come on, it can be done. They're physics PhDs and they can do these for bedtime. So my life as a quant is just like, Immanuel Derman. As I mentioned, please read it. He was a physicist. You might connect to many of the stories you're mentioning. how I became a quant from 25 of Wall Street edits. It's actually a cool thing. They all talk about their lives. It's good to know. So these are definitely bedtime reading. This is actually kind of more of a MBA type book, so that's why it's very explained really well. Not way too many mathematics. I mean, there's a lot of math, a lot of equations, but it doesn't get way too complicated. So it's pretty good. You should. I mean, this book is also amazing to really understand the basics of options pricing. These three, actually these four, all these four books are for interviews. They are very well known, and believe me or not, questions do get asked directly from these books. But then I'm not asking you to read this for knowing those questions. That's not the point here. These guys have a lot of good insight into many of probability questions, math questions, finance questions, statistics questions. So when you are brushing up your memory, when you're trying to learn from things, doing these books are extremely helpful just for your own understanding. Even if nobody in the interview asked you any question from any of these, right? If you ever interviewed with me, I would never ask any question from any of these. But then I think going through these always helps you in preparation. And it's just going to help you in life anyway, because these are all skills that it can help you in physics as well. So I'll stop there, and and any questions, definitely. I hope that's the last time. I think so. Okay. Please.
So you were mentioning, I think 2 slides ago, you were talking about, I mean, obviously coding is a really important facet of this. So with a lot of industry jobs, GitHub is really important. Is it important for banking industry as well?
GitHub?
Yeah, so you're getting it being cultivated, having lots
Right.
of repositories and projects.
Not as much as tech job per se. It's becoming more popular, but then it's not really an extremely important one. But if you have some projects there that you have uploaded, which is really cool, you can always showcase that. It's always helpful. So something that you mentioned, I think it's not really already that much in existence. So if you actually do that, you will be able to differentiate yourself from everyone else. So that's actually a great idea. So you can do, if you're doing some cool projects in Python or anything, and if you upload them there, you can probably 100 people already chatted on it. So that's something you can definitely put it on, even put it on your resume, or at least talk about it. And this is one more thing where, as I mentioned, that in an interview, right, you can bring it up, and then that is going to give you a nice edge, right? And then that's going to give you talking points also, and it will make you confident because you've already done that. So that's a very good point. This is one way. You just brought out one way of differentiating yourself from others. So GitHub is taken by her. What's your name?
Taylor.
Sorry?
Taylor.
Taylor. So don't do GitHub. Yeah.
I mean, I can ask a question about this. So I've heard, getting back to the story about like what the difference is between physics PhDs. So some story I've heard is sometimes people are reluctant to hire people with PhDs, especially physics and astronomy PhDs, say because this issue, they don't really know how to work on deadlines. Because the paper is okay, all right, well I'll do, this paper will get done eventually, but like you're saying, it's 5 o'clock Friday, you got to get that thing done, and I don't care how well you understand it, just get it done, right?
Yeah.
Is this do you feel like it's an issue, from the side of a hiring perspective, that you're looking at typical PhD students, they don't know how to work on deadlines? Does that come into play? Do students already get to work on deadlines better?
Yeah, no, I think I have heard that before for sure, and then when you look at this, it's a very polite way of kind of highlighting that. But no, in general, I mean, I also come from a physics PhD background, so I personally don't always think about it that way. But there are some, especially if it is sometimes a trading job, etc., where you have to take decisions sometimes really within seconds, etc. And somewhere along those lines, they think that PhDs typically take a little bit longer than a few seconds to come up with a decision in the decision-making process, which is actually true to some extent, but to a great extent it is also about the deadlines, as you mentioned, that how are you with your own deadlines, right? I mean, are you the kind of people who really like very long deadlines where you have many days, you're going to go have a beer, talk about that with your peers, and then get on with it? Are you waiting till the last moment to get it done? So it's a lot of culture that you have to ask yourself, but you are absolutely right that the culture there would be really spot on. You have to deliver it. 2 hours means 2 hours. Sometimes in PhD, you can go to your advisor and you know what, I probably still have one more page to write about my thesis, can I extend it by one more day, etc. They would be okay, but here it's not, right? A client asks for something, you just give it to them. So I think if the question is, have I not seen someone also like that in after hiring? The answer is yes. You do see people where they suffer from that. But then is that the perceived notion with which we would go to hire PhDs? I wouldn't. So, since I wouldn't, that's why there are lots of PhDs still coming in, right? But then it is also true that just that PhD, that's why is not enough today. And that's why you show that extra thing. And that's why I was saying, right, you bring up some stories where you show how timely you have been in terms of like managing, and also I think time management. It actually is a little bit tough, right? Because sometimes here you can say, okay, I didn't manage my time well, I have the whole night. I'll just work on it, email my boss at like 6 a.m. and then go to sleep, right? The professor. But here you can't do that, right? If it was deadline at 12, the deadline is at 12. Things are going to shut down because it's a system that might be working. So deadlines are definitely one of the things that some PhDs have struggled with. But I wouldn't really say that that's the perceived notion with which we would go and then go to an interview. More questions? Yeah?
When it comes to online courses, do employers care whether you audit the courses, or is it more weight?
Right, so typically they don't care much. So I think what she's referring to is that sometimes you go to Coursera, you can take the course for free, but then if you pay $70, you can get a certificate. So the question is it really important for me to pay that $70? So the answer is that no. So typically what you have to show is that you actually understand the subject matter. It's not that as an interviewer, we don't really go to the LinkedIn profile to see, oh, that's the certificate right there. But that said, if you think that you can save those $70 on beers and then just have it on that certificate, it's not a bad idea, right? Actually, I thought about this. I got this one from Coursera also on the machine learning one. I think, okay, should I spend this money? But I just did, right? Because it was just something nice to have. But we don't really need to kind of go into it, because remember that there is an interview, right? And I don't know whether the PhD structure at all allows to do this, but if any of you would be really interested in this, it might help a lot, but I don't know whether it works at all to try to do at least one summer of internship. And I just don't know how much a physics department or an astronomy department allows you to do that. But then, that's something you can talk to your professors or chair or whoever. Because I have seen for some other subject matters, like some economics PhD students, some computer science, statistics PhD students, they have actually done internships. I have actually not seen any physics, but I just don't know whether that's just a culture or not. But then if that is something you can do, then you will be able to see these in person. And the other thing is, it is always easier to get an internship than a full-time, right? Because if I hired you as a full-time, we have to go through a lot of interviews because you have to really know well. Because full-time, you have to go through the whole getting the head count. Then you get the head count, then you hire someone, and then you really don't like them. Then it's a big headache, right? But then internships, the internships are typically a 10-week-long interview on either side, right? You are there for 10 weeks, we see you for 10 weeks, you see us for 10 weeks. So it's not just a one-way street. It's you who also would need to interview the bank, right? So that's what you're doing for a full 10-week period. And that is extremely helpful, whereas for a full-time, you are just dedicating to something without knowing maybe as much. And one other thing, I think in some of these, especially Mark Joshi's book, I think he also talks about some of these internal dynamics, etc. One thing I would say is just to keep highlighting that some of those two books, like My Life as a Quant and etc., those are also written quite a few years ago now. So dynamics do change, so don't take everything, with like, okay, this is exactly how it is. But then I think the other thing that would help you is, if you're interested in a bank or if you're interested in a particular job, try to go on LinkedIn, try to find maybe one of your alumni who might be still there. That way you can start like a process of connecting with someone. That's very important, right? So I wouldn't just go tomorrow and then start sending LinkedIn invites like boom, boom, boom. No, that's not how it works. You should make meaningful connections so that when it comes to the actual application, that guy is going to stand by you. That guy is going to vouch for you. But if you just go tomorrow and send 100 LinkedIn invitations, you just increase your number of contacts on LinkedIn, but you don't really reach out to them on anything, that doesn't work, right? And in physics, you know how to, when you talk to a professor, sometimes what you do is go and talk to them about a paper that they wrote or something like that, right? So here also show some interest, something that will connect you to. And I think that's kind of important to build that connection.
All right, so since we're a little bit over, I think this is a good place. There is the grad meeting at the usual time, whatever that is, I already forget, it's the usual time. So you guys can ask more questions, and there's definitely still meeting spots open later today, so if you want to sign up, please do that.
Yeah, thank you very much for your time.
Maybe 2-ish. Slightly, what for me a little after 2. You guys want to stop it? You go again.
Oh,
Yeah, probably a little after 2.
Okay,
Yeah.
got it, thanks.
I think we got like 2 weeks.
Where are we meeting? Or just leaving it straight from here?
Next week I'm planning to do
Question about your characterization,
Yes.
affable, corporations,
and I'm also
Things like,
likely working on some calibration stuff.
payroll and so
If you
on.
want to, I'm going to
Short-term
short some
liquidity,
points.
that really isn't.
Oh yeah, so
You don't need to do anything if
did
you
you-
want.
Well, yeah, that's
I agree
right.
with
But
what
then,
you said.
I guess when
Also,
you are
the
thinking
thing
about
you
maybe expanding into something.
showed
Well, expanding, yes, I'll agree with that.